Hello from Trend Signal for our review of the data and events the week beginning the 14th of August. The spat between North Korea and the US seems to be calming down, at least it has done over the weekend. The war of words has at least, partly as other headlines regarding Trump have replaced the Korean spat headlines, I guess. I think he's intent on not letting the North Korea situation rest. So we do expect some sort of further comment from the Trump/White House in response to any comments from Pyongyang. This is always bubbling under the surface. But for now, Monday morning, risk assets recovering in the Far East. I think the disappointing inflation numbers from Friday, combined with this partial reversal of the safe haven move, seems to have taken the shine off the US dollar advance from last week. Certainly the level it hit on Thursday morning. Big players sort of remain short the dollar as Trump fails to gain traction for any of his policies, really, or key policies, whilst I guess the Eurozone continues its gradual recovery, hence the reason why the Euro USD is where it's at. Interesting to note the move in sterling versus the euro as well. Headline here about parity on horizon as euro momentum weakens sterling. I think that's some way off, of course. But it's been discussed, not surprisingly, because we haven't been at these levels for a good few years. Markets last week, obviously, with the risk-off mode as the North Korean situation built up. FTSE was down 200, the Dow 234. It's interesting to note that the likes of the DAX and the FTSE were quite a bit weaker than the Dow and the S&P. Each of those being down just 1%, but the DAX was down, 2.3%, and the FTSE 2.7%. And that was despite a modest weakening in the euro and sterling, which would normally assist those markets. Gold up $30 last week. Oil moderately unchanged to a bit weaker. Gold holding on to gains, I think, despite a cooling in the North Korea-USA war of words, perhaps firming on the back of a slightly softer dollar on Friday. Oil markets continue to recover, not just the price. In fact, this price struggled a bit last week, but the structure of the market has changed. Oil markets hit an 11-week high on Thursday, for recollections, but that news was not so newsworthy in a way, especially as prices then fell back. But the price for prompt crude versus for future delivery has risen, so that means there's now a premium of spot or near-term deliverable crude over the forward months, and this is known as a backwardation. And I think it's sort of proof that OPEC's efforts are having some effect. There is a tightness of supply for crude for delivery over the next 3 months, and the question I think remains: is this a temporary, or is it something for the longer term? Obviously, time will tell, but the tightness in supply is something that is more likely to push prices up, and that's something that OPEC is looking to do. Geopolitical events remain close to the surface, so looking at our calendar, we can't actually plan for any of those, but I expect more comments from Trump as the US administration really looks to try and keep the heat on China and its dealings with North Korea. The main event this week is going to be the minutes from the last FOMC meeting, Federal Open Market Committee meeting 2 weeks ago. The data out so far, beginning of this week, so Monday morning, we've already witnessed the industrial production number from China. It took a bit of a knock as growth slows in China at the start of the third quarter. Otherwise, Monday, nothing out to discuss. Tuesday, we have a holiday across Europe. Curiously, they've just listed France and Italy, but I know there's a holiday in Spain and Germany and other European countries, which is the Assumption Day, or the Assumption of Mary, which is a feast and celebration of the Virgin Mother Mary. We have UK inflation out Tuesday morning. Surprisingly soft number last month. I think rate rises are probably off the agenda for now. Well, of course, unless we have a strong reading here, and obviously sterling will be particularly sensitive to the outcome there. In the afternoon, we have retail sales in the US, a rebound expected from last month's surprisingly weak number. It's the core number we're interested in, minus 0.2% in July. We're looking for a figure of plus 0.3% 3% on the core reading. Wednesday, we have the regular weekly crude oil inventories. Last week, it appeared we had quite a drawdown in stocks, but in fact that seemed to have just been transferred literally to the big jump in gasoline stocks. So the price of crude oil did not react quite as you'd expect, certainly from first reading. Then the main event of the week, really, the minutes from the last Federal Open Market Committee meeting, the rate setting of the Federal Reserve and the states. The Fed kept rates on hold as expected, but it did pass comment on the tapering of its $4.5 trillion balance sheet, and its comments then in the minutes, in the press statement was relatively soon. Relatively soon is difficult to gauge. Maybe the minutes published at 7 o'clock on Wednesday will give us a better insight into what the actual thinking is of the members of the Federal Open Market Committee. Markets will be particularly sensitive to anything the Fed says, of course, about tapering their balance sheet, because it will have an immediate impact on the bond markets for sure. Thursday, UK retail sales. A bit opposite to the US, really, where we saw a good number last month, and we're expecting a softening in that Thursday, expecting plus 0.2%. Other than that, there's no other data out, inflation data out in Canada on Friday afternoon at 1:30, but no major events left. That's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.